Okay, hello and welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. I am off camera today. We're going to do a short holiday episode here, touch on what's moving into year end and into 2026. Hope everybody's having a wonderful holiday time and enjoyed some time away from markets. We're going to talk about a few of kind of the themes we started to touch on last week, but we're going to keep it pretty light here and we're going to jump into it. So our sponsor of this episode is Investors Business Daily. It is the turn of the new year. We've got 2 discount links in the description of this video. Check them out once you're done watching. Market Surge and their IBD Digital. Both of those offer great value for our discounted price. Let's talk about markets now. So here's the 1 week return. Again, it was light volume out there. So when you're going through your charts, you're going to see nothing too heavy. And also, again, we had a day and a half short. So positive week across the board. That was nice to see. Led mostly, it was pretty even race here. The Russell 2000 was the laggard. The big surprise, though, was the drop. And that's, a sinking drop here in volatility. These are levels we haven't seen in some time. 13 handle on the VIX. No fear in the market at this time. And a great time if you are a little anxious going into the new year to pick up some near-dated protection, talking, 20 days or less. Not saying it's a trade necessarily I'm putting on, but if for those that are a little more nervous, vol is pretty cheap right now. If we take a look here at sectors across the board, materials, financials, tech, those were your 3 leaders here, and everything was green except for consumer staples. If we take a look at our smart trend filter, this measures basically trend momentum, cleans up a lot of the noise. It really keeps you in sync with the path of least resistance. This indicator is available for TC2000 and TradingView on our website. You can see lots of green dots, and most of these trends have been pretty established here. Utilities and recently now staples in the bottom right is in the negative, along with real estate. If we keep moving here, we take a look at I want to show this factor analysis here. I posted a chart that illustrates a little bit of this, but I'm kind of interested specifically in the bottom right. This is emerging markets relative to the S&P 500 or relative to really kind of total market. I'm using a Vanguard fund on this ratio chart, but you can see here that EEM, so emerging markets, has been carving out kind of a multi-year, you could call this almost like an inverted head and shoulders pattern that's trying to break up, which could kind of signal to us that you might have some broader secular outperformance here in emerging markets and maybe even international stocks at large. So notable, a bigger picture. Obviously, that doesn't speak to anything in the shorter term, but it would be certainly a big secular change if that were to take place. So let's talk about the individual market here. So S&P weekly chart, you can see going up, breaking to new closing all-time highs here. And if you tuned in last week, we came in with a pretty good flip, a pretty good bullish rhetoric here last week. We talked about the S&P 500 wanting to really kind of inch back up and retest these highs. We pointed out last week how this breakdown failure was in fact a failure, right? That this was a ball drop by the bears. They couldn't get follow through action. Buyers started to bounce us up, and combine that with seasonality and just these end of year dynamics. It seemed like the market wanted to now flip and float higher, and that's exactly what we got here. Basically, the read now is more of the same. Until we get a spill, a break below these recent highs and then start taking out some of this more important structure now, it seems like the bulls just have this to float a little bit into this holiday time. It will, sometimes can be tricky turning into the new year just to see how the market reacts with some of those 26 flows that could be coming through. So we do want to pay attention to the turn of the calendar year. It's not just the calendar. There are some other, kind of ramifications where capital is now available and ready to be invested. So we do want to be mindful of that. But as it stands now, market a little stretched in the short term, all-time highs though, so it's tough to be too negative here. NASDAQ 100 notably lagging, right? We're not breaking out to new highs yet. We're not taking out the highs like we are in the S&P 500, but still we are floating back up here. And we do really want to pay attention now to see if the Qs can take out this sort of lower high, right? As it stands to the October highs, we have a lower high that we put in November. And so we do want to see the Qs here break over this 630 area, ideally next week or in the next 2 weeks here. Otherwise, this does get just a little more pessimistic if this lower high stays in place for more and more times. People will start to recognize it, and sellers or longs will, get a little bit more anxious and nervous if we're not breaking out and we're not keeping pace. So something to be mindful of, but not outright bearish here. And then the Russell 2000 staying very sticky to the October breakout highs. These are the bigger highs to break out from, right? This is the monthly sort of pattern here for the Russell 2000. I know I have a lot of lines on this chart, but basically, the Russell 2000 finally started to take out its 24 high just recently, and now it's starting to hesitate just a little bit. So we do want to pay attention to the Russell here on this 250 area, acting as a bit of a pin magnet, and we want to see if this can thrust up and, again, similar to the Qs, actually start to break out and see some sustained momentum. If we take a look at VIX here, again, you can see just really kind of nosediving down to the 13 handle. This is going into year-to-date lows into the end of the year. Really going to go back to 2024, and really 23 is where we spent most of the time seeing, actually, no, I'm sorry, this is 24. 24 is when we had the 11 and 12 handle on the VIX. So we are sinking. Again, vol is cheap, protection is cheap. You can take advantage of that if you're in the more pessimistic camp. Let's talk about metals. They are all the rage this year. So gold, here's the yearly chart, up 72%, really just kind of romping and stomping all of the equity bulls. You can see gold now very extended. It's above Bollinger Bands, but it continues to work. Continue to see, a lot of complacency or just not too much excitement. And quite honestly, it's a lot harder to buy gold here, right? It's a lot harder. Now, there have been plenty of times where you could get in technically at some better prices, even for swings or continuation patterns. Gold had that nice 10% pullback here in October. A lot of people thought this was the blow off. This was the end for gold. We found a higher low and buyers just kept supporting it. Still remains one of my largest positions. Silver now just really, making gold look like a, safety stock, 170%. You can't laugh, but when you see that number, it's just been an amazing year for metals. Tons of momentum. Look at this volume here. I mean, this feels like you're getting to a little bit of a blow off here. Not saying that this is the top by any means. I mean, we could just easily push up. I mean, with a 9% move on the day, what's another 9%? What's another 15%? These numbers are almost, kind of just getting pulled out here. And so this end of, if this is an end of move or if this is some type of spectacular kind of blow off here, I mean, you could easily get SLV to 100, right? I mean, there's nothing that says we can't in a very short amount of time. The steeper you go, the quicker that happens, the more volume that comes in, the more likely you are at a termination point. But for now, SLV bulls are getting the job done. Certainly don't advocate really getting on board here, but it is pretty impressive to watch. So I'll stick with my gold, and it's definitely the slower horse in this race. Let's talk about Bitcoin. We haven't talked about Bitcoin in a couple of weeks, or at least last week we didn't mention it, but we turned pretty, bearish, glass half empty on this a few weeks ago, back in November, on this breakdown below 100K. We made it pretty abundantly clear that we were not that excited about Bitcoin. For a long period, we were talking about like this 106, 108 area. That was kind of our big line in the sand. We had another one up here. And as that structure started to break down, our trading systems divested from it way up here. And I can say way up here because it does feel like ages ago, but we sold out about 113, 112, I think was the exit in the bulk of our exit in our longer term system. And then a bunch of our tactical models just continued to divest. And as it stands here, this is still very uninteresting. Now, I will say that the sideways consolidation has moved to a period here where you do want to start to pay attention, because we've now gone, 3-4 weeks here pinned pretty much just below this 90K area. And so it does feel like Bitcoin's getting ready for some type of directional move. And look, it's going to be a crapshoot here, in my opinion, on whether or not we're going to break up and out and make a run back towards 100 and see how the market feels retesting back up at a six-figure Bitcoin, or we are about to really sort of capitulate and see a nasty second leg lower and just, or at least retest, maybe get a 7 handle and just see how that feels. I think Bitcoin is getting ready to make some type of probing move here. And, don't let just because we don't know the direction, that doesn't mean there's not, signal to take in this. It does feel like that expansion is coming. So if you're a breakout trader, if you're, savvy with options, you can structure trades to really benefit from some expansion in vol and a directional move here in the next month. So let's pay attention to that. Right now, I'm still pretty light on Bitcoin. I just really need to see it prove itself, and right now it's just consolidation. So Bitcoin, benefit of the doubt really to the sellers at this point. You could make a very micro case that MSTR here is some, if you believe it to be some type of leading signal, which in the past it has been. I mean, you got a little bit of a hammer here. You got a little bit of an undercut of the lows that we made coming into the month of December, and we sort of hammered back above it. And, in hindsight, sure, throw on a weekly chart. If this was kind of a double bottom test here and MSTR can start to lift, then that could be interesting. For me, I would really like to see this back over 170, 169, 170. That's what would get me more excited to call at least some type of more shorter term, intermediate term bottom. I did play this hammer here, and I think we talked about it in Stock Market Weekly. So I was a buyer on this hammer, on this very heavy volume that came in, and this nice kind of push back up above these recent lows. I did take some profit, and then I just sort of sold the rest out as it started to roll back over. So I'd love to see another, second entry here for tactical trade. But again, something more durable. We got to reclaim some bigger levels. But there's been a lot of damage here in MSTR, in the treasury space, and frankly, in Bitcoin, generally speaking. It is the end of the year, so for anybody that has a tax loss for MSTR, which is the bulk of traders after a 45% decline, it's just hard to get this to move up because you just have plenty of tax loss and, kind of end of year tax loss harvesting that could be taking place. Now, if we move to some other sectors, rapid fire financials continue to look great. Here's the weekly chart. You can see kind of breaking up, continuing higher, testing that breakout area, and then moving up. That looks good. Discretionary, kind of wavering a little bit here, but still kind of just popped its head up to new highs and now moving sideways. I think it's interesting. And then finally, industrials, kind of a similar look here, really sideways, and now seeing if it can break out and actually lead. That would be some of the areas I'd be paying attention to into the beginning of next year. And I'll go a little more specific, but solar, I think, is also interesting. We've talked about solar a few times. It's really just been unapologetically trending higher. We finally had 2 weeks down. We went sideways. This was a week one up. Volume starting to come in a little bit. Nice kind of holding pattern. I do have a position here in TAN, so I'd love to see this continue, but solar generally here looks pretty good. And in terms of news this week, I mean, we had the largest acquisition by Nvidia, $20 billion for Grok. And you can see that giving a little bit of life here to Nvidia, perhaps. I mean, there's other catalysts, and this was already starting to round back up, but giving a little bit of life to semiconductors there going into the end of the year. And I will do one pick here from our Quant Rockets momentum model. It's Talon Energy in the utility space. Talon here, it's utility, but it's up 90% this year, so not too shabby. It's got some beta behind it. It's sold off pretty much with the space over the last couple of months, starting to round back up now. Our momentum model likes it. I do have a position in it. We own it in Quant Rockets, so we'll see if this one can continue into the end of the year. So that is it. Thanks as always. Thanks for all the support, the mentions, the comments, the emails this year. It's been a fantastic 2025. Our systems, our models, our subscribers seem to all be happy that I've talked to. So I'm grateful for that. We've got links in the description of this video to our trading systems, to our sponsor, IBD. I will see you in the new year. Have a great rest of the sort of holiday season, and we'll catch you next Friday. Take care.